The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, folks, we are in the third day of the rally. We started Sunday, Monday, Tuesday, Wednesday. So we're going to check and see if the market is going to turn down from here. So far, we've had a little less than a 50% retracement in the New York Stock Exchange Index. We're approaching the 61% retracement in the S&P, which would be up around the 2068 level. And of course, the NASDAQ can go wherever it wants to go, which it usually does. And of course, with Apple being strong this morning, it's heavily weighted in the NASDAQ. It's more than 15% of the NASDAQ itself, one stock. So we'll see if it's going to have a pretty good move into that level. Now, I wanted to share with you a chart that was sent to me by one of our listeners here in the den, and I'm just going to show you this. I'm going to make a couple comments about it, but I'm not going to say it's going to work or anything like that. I just want to show you the correlation that someone did just using a one-year correlation between the market in 1937 and the market where we are right now. Of course, there wasn't an S&P 500 in 1937. That didn't start till, I believe, 1950, as I recall. However, these are not unusual to do correlation charts like this. Commodity Code Graphics has a program in there that you can correlate anything. You can take any two time frames on any two vehicles and correlate them, and you'll find all different kinds of correlations that some of them work pretty good. Some of them look absolutely horrible, but that's what they are. They're just looking at it. And the reason why they're there is because the market does the same thing over and over again. Not exactly the same thing, but the same thing. And they're very, very close. This particular one is showing the move in 1937, you know, where we had a big drop in stocks. The red line is where we are as of November the 13th. So I don't know if that's going to be the case or not. I would make a comment about the 1937 market. In 2007, one of the reasons why I was so incredibly bearish was because of the long-term cycle that was there. I don't remember. I believe it was the Uranus Neptune or Uranus Mars or Uranus Pluto. Well, it would have been Uranus Saturn is what it would have been, and that was the one that focused on banking systems that were breaking down. This is what happened in this time period that you're looking at. This is 1937, Larry. Wake up and smell the roses. I'm thinking of 1837 because the 1837 chart was the one that I was watching. This one is for 1937. This was after the Dow had bottomed on July the 5th at 40. In 1932, we had been in a 5-year rally, and then the market backed off into 1937-38. Then we had this gentleman from Linz, Austria, named Adolf Hitler, that came in and took over Europe, and that started World War II, and that took all the markets higher forever, because we've been going up ever since. But anyway, I was referring this to 1837 because I'm really messed up here, folks. Just bear with me a second. This chart is for 1937. I don't give it any credence at all because it's a short-term correlation, and I just don't like it. I'm trying to explain to you why some of these correlations work and some of them don't. That's what I'm trying to do. In 1837. That's when we had a major banking failure, and it was part of the Andrew Jackson era. And what he was doing was looking at getting rid of the U.S. bank. It was the first U.S. bank at that time, and it stayed out until 75 years. I believe it was in 1913 when they brought back the Federal Reserve on that Christmas Eve vote, and that was the book, the Creature from Jekyll Island. But that's what that was all about. I'm sorry I got the dates wrong, but I just wanted to clarify that. These correlations will work, and when they're working, they work fine, but that's all they're doing is they're mapping what previous patterns they've done. The reason that someone asked me the question, Commodity Quote Graphics, CQG, has a program that will do that. I don't use it very much. Jim Twentyman and I both use CQG, and Jim does that for me when I need something to do it, because he's really computer literate, way beyond me. But well, that's not saying a whole lot. But anyway, that's why you have that. But the reason why those charts work is because all the patterns are the same. They really are. And the way to prove this to yourself, but you've got to be a mathematician, is to get Andrew Lowe's book, The Non-Random Walk Down Wall Street. It's 700 pages of some of the most amazing formulas that you've ever seen. It looks like on a blackboard that they're programming the atomic bomb or something. I mean, it's got so many ways of statistically looking at data, and that's what Dr. Lowe did. And he basically said that not only do these patterns repeat, but they repeat with regularity, and they are predictable within limits. And that's why technical analysis works some of the time. It certainly doesn't work all the time, but it works some of the time. And that's just a very, very, very comprehensive book with formulas that are just way beyond this old cowboy's pay grade. But I had been using pattern recognition for 35 years before I ever read that book. So I had a pretty good idea that double tops, triple tops, all these things, pennants and flags all had some type of probability behind it, and especially butterflies and Gartleys that are nothing more than triangles, which is what we're looking at when we're watching charts anyway. And so that's why I looked at that. So the correlations are there. You see this a lot on the internet. People will pull up something like that and they'll show a correlation, but in fact, it's just looking at past data and comparing it what's happened. There could be no the correlation is the cycle that's there. And that, I believe, is related to the astrological part, which I only understand a very, very small portion of. So that's what we're looking at. Now, what we do have is a pretty strong point coming in here today. This is the 18th. This was one of the days that we had with our friend Norm Winsky from Astro Trends. It's also a pretty good aspect day. So we'll see if that's going to hold it. But usually if the market is really bearish, and we've had the big breakdown in the weekly charts on the New York Stock Exchange Index. We've had a really shallow rally back so far, not even to the 50% level, at least so far. Today it'll probably do that, but we'll wait and see if it starts to turn down. One thing I feel very, very confident about is when we take out the lows that we made yesterday, or the one Sunday night would be the more applicable ones, then you're going to go down. That level would be 1993 in the futures, and that's the 60 points higher than that, right now. But when we do take that out, look out. Then you're going to go down. See what's going on. So, well, anyway, see, someone just mentioned that they have the Dr. Lowe book and he has a degree in mathematics and it's still over his head. Don't feel too bad, Bill, because I gave it to John, and I gave my copy to John and Howard Arrington, who both have PhDs in physics and mathematics and computers, and they laughed and said, boy, these guys were, way above most people, but they understood the book. But they're one of the few people that I know that could understand it, because the compilation of those formulas are just beyond belief. So, and Dr. Lowe has got one of the highest regards on Wall Street. He has a $3 billion hedge fund that all the profits go to cancer research. And he has the finest minds that MIT has to offer, because he runs their applied mathematics and artificial intelligence section there. So he's a very busy man, and he has some incredible people on Wall Street. And many of the quants that go to places like D.E. Shaw and Renaissance Capital have come from his area at MIT. So that's just high mathematics. What we're trying to do is look at small patterns and see if they give us a pretty good idea of what we're looking at. All I know is that, we had a pretty good bottom coming in this week because the market was very, very oversold. We're reducing that oversold situation, but we still have a chance to get up around the 2070 in the S&P, and maybe we go higher, and maybe this is another great buying opportunity, but we'll have to let the trading gods tell us that that's what's going to happen. But right now it still looks rather bearish to me. I am able to post a few charts in here that we can look at, and that the first one I want to look at is the one we always look at, and that's that New York Stock Exchange Index chart. Going back last 20 years, we've had the break. What we're seeing now in this right-hand side over here is a 3-day counter trend rally, which you're bound to see because we were down 8 out of 9 days. And that made us very oversold in stocks, and that's why we assumed we were getting a pretty good bounce in this level. The other chart that I wanted to show you is the chart from one of our friends over in Hong Kong, and just to give him an idea of what he's been looking at, and he's got a really nice chart here. Now he uses a different data service, and all I wanted to do was to show you Roy's chart here, but he's got the pattern that we were talking about yesterday in the Treasury bonds, getting down to the 152.16 level. We got down to 152.18 was the low, and then it rallied 1.5 points, and then it's backed off this morning, back down to another 61% retracement. So as long as we can stay above the 153 level, we've got a chance for bonds to, rally another couple points up to 155. And I don't know when the Fed's going to, drop interest rates, if they ever do. But even if they do, this is pretty much built into the market because we've sold off so much in bonds, because our high was just a few weeks ago was 161. So there's another, situation where the news would probably be already in the market. So we'll see what we're going to look at. So we'll wait and see. The overall chart of that long-term New York Stock Exchange Index, the importance of that chart is the fact that it's got a 3 drive to a top pattern, the 135 expanding triangle pattern, which is the most important. And then also, each of those years, we have broken the trend line, just like we did in 99, 2000. We broke it in 2007. We also broke it in 2008. Now we're having to rally back. That completed on November the 2nd, and as long as we don't get above those highs of November the 2nd, it appears to me that this is what we should be looking at from the downside. But we are in a 3-day rally, and how far the rally is going to go, we'll have to wait and see. We're going to come up to a little break here, and then we need to talk a little bit about the gold and silver and platinum because we're getting close to levels that should bring us a really good rally. I'm talking in the tunes of probably about $100 an ounce. Again, the last one was 120, so we should get about $100 an ounce rally. It may be only 70, but we should get a really good rally.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, that's the introduction, of course, to Trading Places, the music of Wolfgang Amadeus Mozart, the Wedding Feast of Figueroa. Anyway, we're going to take a look here at the gold market here. We had the ABCD pattern up around that 1192 level. Boy, if we'd have got above that, we really had a chance to see gold rally, but in fact it didn't. It told us it was still in a bear market. That means we're going to make another new low, which we already have. We've already taken out the low of July the 27th, and the next level of support is $20, about $18 away, which isn't very much in gold anymore, down around the 1040, 1050 level per ounce. And if the Federal Reserve would come in and raise rates, that would probably be enough to push the market down to that level, and we'll see whether we get a good rally from that level. And the last rallies, of course, have been $70 and $120. So we could get a pretty good substantial rally from that level. Now, part of the thing is when you're looking at the metals, I like to look at, I don't trade platinum very often, but this is the one that we posted here on Friday, and we're continuing to go lower. I think we're down 18 days in a row, which puts it much of an outlier event in itself, because we've got down to the 847 level per ounce in platinum, which means it's taken out the low of the 1.27 level, setting up the 1.618 at $804 per ounce if we were to get down there. But to see the market down that many days in a row is really an outlier event. You don't see that very often. In the commodity markets, I believe 22 days is the greatest number of days that we've ever had a market. I remember it was 22 limit days in sugar back in 1966. Sugar went limit up for 22 days, and then silver in 1980 went up limit up 22 days, and then went down 22 days. So that's when the COMEX ruled to stop all short sales of, stop all long buying in silver, and they increased the margin for buying silver by 200% to stop speculation when it was around $49. And the reason why is many of the people on the board of the COMEX were short silver, being members of the COMEX, and that took them off the hook and put the bulls in a bad spot, and of course it dropped, and no one said anything. But it basically broke the cartel that the Hunt brothers, Lacey and Bunker, had been putting along with some of the people from Saudi Arabia to conquer the silver market, but that didn't work. And gold at that time was $865. That was the high on gold on January the 20th, 1980. But I remember that day just like it was yesterday. And anyway, the market went from 865 in gold down into 2003, where it bottomed around 260. And of course, silver went from 49 down to, I believe, I think it got down to about 12 cents or something at one time. I don't remember what the low was in silver after that. No, it wasn't that low. It must have been around $12 or $13 an ounce. I have to double check that. Anyway, we'll wait and see. We'll see that the same thing. Someone just posted. I met Nigel. Basil. I was thinking when I saw Boston, I was thinking of Nigel Ferguson from Harvard. Basil, that's why I saw that. But Basil just posted in there that Joe Granville was in Boston at that time. And I remember meeting Joe Granville in 1977 at the Drexel directors meeting in Las Vegas at Caesar's Palace. I've told this story before, but it's so funny, I'll tell it again. Joe Granville was a featured speaker, and the entertainment was Lou Rawls and Liza Minnelli, and he came out on the stage, and this beautiful showgirl came out with carrying this tray that had this some type of 1830 brandy that was like $1,000 a bottle, and that was a lot of money back in 1977. And he got up to talk, and the first words out of his mouth were, "Let's make a toast," he said, "to all the people and all the suckers that don't subscribe to the Joseph Granville newsletter." And one of the directors sitting at our table, he said, "Sell it." He said, "That's the high tick on Joe Granville." And about 15 years later, I met Joe again in New York, and I told him that story, and he laughed, and he said, he said, "That was my high tick." He said, "That was the highlight of my career." And he said, "I've been sliding down the slippery slope ever since." So we're going to take a little break here. We'll be right back. We want to talk about the bond market one more time.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted into the room the chart of the inverted Commodity Research Bureau index versus the U.S. dollar. What this means is that when prices are dropping in commodities like we have over the last 2.5 years, the price of the dollar goes higher. This is our esteemed leader Tom O'Brien's been talking about King Dollar well over 2.5 years, and that was part of the reasoning behind it, I believe, because when the dollar was at 73 to 74, that's when he was extremely bullish, the dollar. And now there's a possibility that if we get the dollar very much higher than where we are right now, we could be breaking out. Now, much of the dollar index, 53%, is based on the euro, and we know that the euro still has about 7 points to go for its long-term price objective, which is down around the par level, 99 to 100 level. So that's what it looks like for me. And believe me, the problems that they have in Europe with not just what's going on in France, which is a terrible personal tragedy, but with all these people coming in, the immigrants. I mean, this is part of the problem is you have a lot of these young folks here that could be terrorist related. And if you've got 800,000 people coming in, or a million, whatever it is now, if you just take a small percentage of that, just, say 3 to 5%, you're talking about an army of 30 to 50,000 people. And that would be that would look like it would be pretty, pretty much a done deal. It'd be a little scary. I would be very reluctant to, to do that myself. So we'll see. We'll have to wait and see. Anyway, the S&P 500, we talked about the 61% retracement on this one, and we're opening stronger in the market today. So we could get up to the 2068 level. That would take out yesterday's high by a little bit, but that should be it. Now, the New York Stock Exchange Index chart is much weaker, of course, because it's not the, it's not all the highfalutin things like Google and Apple. And Apple's up quite a bit today. They probably sold another 3 billion phones to China, but we'll have to see how many phones that was after all. I mean, it's hard, when Apple gets down, a certain amount, you have to look at it. On August 25th, if you remember, that day we were on the air as things were happening, and Apple was trading, I believe, down about 20% at $85. And I said, if you want to buy something, buy Apple. I didn't put that down as a major recommendation, but I said that's what you probably should buy. And of course, it took off and rallied all the way up to the 786. Up at the 124 level, and now we're getting a little bit of a bounce back from that. But the news on Apple is out there every day. They get more free press than any company I have ever seen in all of my years at looking at this stuff. So I would be really remiss if I didn't tell you that stock gets a whole lot of free press, and they have a great product. I don't use it because I'm a Walmart $32 phone, so I don't use the real fancy stuff because I don't do any texting or social networking that that makes you think a little bit more than I'm accustomed to. Anyway, I want to talk about the bond market, folks. We've got a chance here. I showed the chart from Roy in Hong Kong, which is a really beautiful chart on the bonds. But as long as we can stay above the 153 level in the bonds, we've got a pretty good chance, for the bonds to have a rally. But any rally that we get in the bonds should be sold. And the reason for that is, folks, is because the long-term bond market is certainly in a bearish format, and long term, because we topped several years ago up the 161 level, and then again the market hit 161, but that was not a true 161 because the market, the CME specifications on the bonds had changed, and so that's why it was just that maverick month of September that made bonds look like they were trading at 161, which in fact they were trading in the low 150s if you did the relationship to yield. Now, I want to talk about I've been jumping around here a little bit too much because of the email problems I've been having, but the platinum and the gold and the copper and the silver have a chance to bottom, but I don't believe that bottom is coming in until probably around the Thanksgiving area or close to it. And we're only 7 or 8 days away from that. So the reason why I'm saying that is we still have some longer term objectives here, about $20 lower in the gold, down around the 2050 level. 1,050 level, and the platinum is down about another $35 or $40 from where we're trading. In copper, another 6 or 7 cents, which is not much in copper, to get down to that 207 level, which would be a pretty good area to look at copper from a really long-term perspective, because that's the 786 retracement on the long-term yearly chart on copper, going back to 2009 when it hit under $2 a pound. So that's what we'll be watching. And maybe this is the thing that will make the markets, what the markets are seeing. They're seeing something more bullish than I'm seeing. Maybe they're seeing that this commodity prices are ready to come to an end, and the buying is going to come back in, and everything's going to be okay. Quantitative easing doesn't tell me that, but because it is different this time. We've had, $3 trillion pumped into our market And I don't think it's a good thing, but we'll have to wait and see what it says. Right now, I focus on what that New York Stock Exchange Index is doing, and it does not look bullish to me. The only way it looks bullish to me is if we get above the November 2nd high. That was a perfect 61% retracement, matching the high from 2000, 2007, and 2015. I watched a webinar yesterday from someone on Wall Street explaining why we'll get a small pullback here right after the first of the year, maybe a 5% pullback, and then the market will go to 25,000 in the Dow and 3,000 in the S&P. And I don't know if that's going to happen or not, but that was his opinion. I have an opinion, and remember, everyone has one, and it usually smells. So anyway, we want to keep an eye on that. The other part of the bond market that we want to be watching about is the junk bond market. This is related to the low price of oil, because much of the junk bonds are in the oil markets because it's highly speculative, and it's really a really a big gamble when you're dealing anything in the oil business. It's always been that way. I only did one thing ever in the oil market when I was in college. In graduate school, I'd done really well. I'd made a lot of money in silver, and my fraternity brother, my big brother in our fraternity, his father was in the oil business down in Texas, and he had a little fund that he was putting together to do some oil drilling, and I had some extra money, which was a lot of money back in those days. So I gave him $3,000, to do some speculation, and that was a lot of money because at that time the minimum wage was $1.25. Well, 13 years later, I'm working for Eli Lilly, and he came into Indianapolis to see me into the office there at Lilly, there on McCarty Street, where the main office was. My office was up on the 8th floor, and he came in. He had a paper bag, and he came into with this paper bag, and on my desk, he turned the paper bag upside down, and he had thousands of dollars in there. It was about $15,000, as I recall. It was my return on investment over the past, I think it was 8 years that I'd been in that thing. And so just as he did that, my boss walked in the office, and he saw this cash on the floor, and I had to spend 2 days explaining where this cash had come from, because they didn't believe the story behind it. But that's what happened. So that was my first and last speculation into the oil business, and since that time, not very much. I did do some speculation back in 1991 when we had the Desert Storm War, because oil was at $42 and it was forming a massive butterfly pattern from the low that it made down around, I think it was $8 a barrel. And that was right during the Desert Storm. And when the war hit, everybody thought oil was going to go through the roof. And it had its largest down day ever. Never even come close since that time. It was down 25% in one day. It went from 42 to 31. And 31, they didn't take that high out for many, many years. So sometimes these markets can surprise the heck out of you. So, but that was then, and this is now. The dollar is at real critical level here, folks. We have made new highs in the Swiss franc. We're almost making new highs in the Canadian dollar, and there's a chance here that this euro could melt down, and then you'll be looking at something really serious. This might be the thing that makes stocks go crazy, because people want to own whatever the flight to quality is, or whatever the story happens to be. That's what you would be watching at. But the euro on the long-term charts has a very clear pattern out here at the 99 level, and that's quite a ways from where we are right now. The one I have listed now is showing 107.69. We're 100 pips under that, because that's what we're down so far already this week, and so that's the main thing. If you're looking at the price of I lost my train of thought here. Oh, on euro, if the euro rallies anywhere between 70 and 100 pips, if you're a short-term trader, take a look at it, and you'll be able to look at it. You'll be able to see. Now we have a question about about one other cross rate that is very important, and that is the Japanese yen. I wanted to put that up here and I'll show you because we are approaching this level again. I'm glad you brought that up to me. Thank you very much, Mr. Peak. I appreciate that. And you'll see that we're almost up to this 123.77 level here in the Japanese yen. That's also a 20-man line. We backed off a little over 150 pips from the first time, and now we're going back and we're testing it again. So if we get the Japanese yen above the 124 level, that would be a breakout, and you could probably see the yen take off. Now remember, the yen at one time used to be 360 to the dollar. We're at 123 and change now, so it's got a long way to go if it ever starts to break out. But that 360 was back in 1989 when the Nikkei was trading at 39,000 and change. So we want to watch that relatively closely. As far as the commodity markets, the overall the grains, they still look lower. You know, it really doesn't make a whole lot of difference. You know, so right now, because they're just languishing down at these low levels, and they just keep making lower lows. All commodities are. With the oil is holding up a little bit. It's still holding above that $40 per barrel level. But if we get below $40 a barrel, there's going to be new selling coming in oil, and the next target is around $28 to $25 a barrel, and that would take out the lows of 2009. Folks, when you look at all these charts and you look at all the stocks that you're looking at, you got to ask yourself the question, how can our economy be in such great shape if we've got commodities at prices we haven't seen in 6 or 7 years? Okay, and how can that be? And we've got the transportation index that's been in a bear market for over a year. We got the utility index that's been in a bear market for over a year. You know, that's the main thing. Now, we got a major crude oil report today at 10:30 Eastern time that always, makes the market move a little bit. But remember, below $40 a barrel is not going to be a lot of support in the crude. We've been down here to 40, 3 times in the last few days, and we've held it. But, if it doesn't hold, then look out. You'll see the market, melt down. But the commodity markets are still pointing for lower prices. You know, that's basically, what it looks like from the, from the cheap seats here in Tucson, Arizona. One other thing that I wanted to mention here right before we come to the break that is incredibly important. Unfortunately, I can't post the chart for it because of my email problems. But if you'll take a look at the emerging markets and do a correlation. I'll do this for us tomorrow, but I'll do the correlation between the emerging markets and the crude oil, and you're going to see a correlation that'll just knock your socks off if you wear socks. And if you don't wear socks, it doesn't make any difference. But the correlation is about 90%. So when oil goes up, emerging markets go up. Oil goes down, emerging markets go down. So they're joined at the hip. And emerging markets have topped in 2010, folks. This is 2015. They've been a bear market for 5 years and still going down. And that's another reason, to look at it. Because you look at the emerging markets, 50% of them are in Asia. That's your China and Jakarta, Indonesia, and all the others. And so it's a very heavily weighted on the Asian formula, but they are also going down quite a bit. So we want to watch that very closely. I think we're coming up to a break pretty quick, and then we'll come back and wind up the show here and see what's happening for the rest of the day. And let me see what else that I wanted to cover before the break. If you have any questions, folks, it's 877-927-6648, and we will be back right after these few words from our sponsor.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I'm going to be interviewed on television on December the 8th with Tom DeMark and a couple other guys. They're having a roundtable discussion here in Scottsdale, and I've been invited to be one of the speakers there. I don't, maybe they were asking me to clean the tables or deliver the coffee. I'm not sure, but I've been invited, whatever it is. Folks, keep in mind the chart that we posted in here several times, the New York Stock Exchange Index weekly chart. Oh, we got a call from Martinez, California. Brent, are you there?
Good morning, Larry. How are you?
Just fine, my friend. We've only got a couple of minutes, so what can I do for you, buddy?
I'm just glad to have you back. I like your lead-in music. It
it took me. I had to go to the Supreme Court to get it done, but I really like that because I enjoy the movie so much.
I did too. I don't know if you have time. I was going to have you just look quickly at FCX, Freeport McMoran.
Yes, I can't pull the chart up, unfortunately, because of the problems that I'm having, but I'm aware of the chart. It's pulling back a bit, I guess, correct?
Yeah, it did a pretty close 786 retracement. It had already completed an AB equals CD, and so I took a shot at it. Anyways, we'll see. I've took a
well, just you're smart enough to know the retracements and where to put your stop. So it's certainly acceptable. I think we're close to copper in the bottom in copper. I'm looking at around 208, and we're trading around 212 today. So it's not very far away. So you might want to keep an eye on the price of copper because the correlation between Freeport McMoran and copper, is quite high.
Yeah, it seems to be affected by oil prices as well. So, I just wanted to wish you all the best, you and your family, going into Thanksgiving and the holidays.
Well, you and Leanne too, my friend, and I hope to meet you one of these days.
You betcha. You take care and have a great day. Okay.
You bet. By the way, folks, I wanted to mention that if you get a chance, during this holiday season, there's a lot of people out there that are homeless or on food stamps. So if you get a chance to help some people, our church has food baskets like some other churches do. So you want to try to do that. So do a little something for someone who has a lot less than what we have. But live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.